Good evening, traders. It's Thursday, November 20th. Man, what a roller coaster ride of a day for those who don't have a strategy and those who trade based off emotions. So we talked about this morning in pre-market that we are going to see the stock market mostly juiced higher by news from NVIDIA, getting everybody all pumped up and primed. We are going to see the market gap higher right into resistance for both the NASDAQ and the S&P 500. And how it's going to get a lot of people all hot and heavy to want to pile into the stocks and get them all in a feeding frenzy. Our hot list this morning was all green. Everything was up pretty darn strong. It was a pretty broad market move. And when it's a broad market move and everybody's just piling in, they don't care what price they get, we get this red bar right here. We get our FOMO indicator, which is what I was saying. We get ready for some potential FOMO. And I didn't know if it was just going to be a Magnificent Seven kind of rally or if it was like it was going to get everybody all crazy to just instantly want to buy everything and they don't care what price they bought. So everybody literally paid a premium today at the open. We had massive FOMO reading at the open. Of course, what happens after FOMO? Everybody piles in. Once that momentum stalls out, the market usually goes for a swan dive. And of course, when we look at the markets, we know we are in a downtrend. We're positioned to avoid chaos and to not have to deal with all of this. And that's exactly what happened. This was a bounce up within the downtrend. Now it's interesting. Today is definitely a wide range day. It got juiced up from news. And then of course we had unemployment news that drove it down. So we've really got this seesaw action. And I do think that the selling today was going to get sold into. Usually when it's one company that gets everybody all excited, it usually gets sold into. But then we had some poor economic data with unemployment jumping up to 4.4, I think it was, going forward. But it's interesting because we talk about how you do not want to buy inverse ETFs just yet. You really should be trading inverse ETFs when we're in a bear market, when the majority of the time, day after day, week after week, the trend is down. But when we're still in a longer term bullish environment, you don't know how far a pullback is going to be. And there was one